Nvidia reported earnings after the close, and it reported a pretty nice earnings report, and we can see that with price action for aftermarket hours activity. It's looking like we'll gap up tomorrow morning. We're trading pretty dang close to that 500 price level, where I imagine we're going to see some shorter term resistance. Now in today's video, we're going to use two tools. The first is our seasonal analysis indicator, and we're going to use this to understand what does price action look like for the month of September inside of Nvidia. That's the question we're looking to answer with this tool. After we answer that question, we're going to apply our post-earnings analysis indicator to build a better profile of what we see happening inside of Nvidia 7 days after earnings, 14 days after earnings, 30 days after earnings, and 60 days after earnings. The goal here is to understand when do we want to try and jump on this ship to participate in any sort of bullish activity, and if it even makes sense to do so. Now starting off first, before we even load in the seasonal analysis indicator, I have simple Fibonacci levels loaded on. This is using October 2021's high to October 2022's low, and using that swing high to swing low, price action with aftermarket activity is trading pretty dang close to that 1618 level, which is our golden ratio. Yet another reason why we expect to see that level act as shorter term resistance. Now, if we dive deeper first using our seasonal analysis indicator, I'm going to load that in. This is a free indicator for everyone watching in case you'd like to download and follow along. I'll leave a link for it in the description box below. I have a daily time frame chart with 5 years worth of data loaded on. Now all of the yellow labels are the ones in which we can see some weaker performance. So for example, January we can see 40% of the time price action closes below where we opened. If we see April, we see 60% of the time price closes above where it opened, but the average for the month is negative 1.54%. September is a similar story here. 60% of the time, price action tends to close above where we opened. However, our averages for the month are negative. So that gives us a little bit of a split story. We don't have a clean bias one way or the other like we do for a lot of the other months inside of Nvidia. So that's our first reason why we might have, say, our red flags or maybe our yellow flags up. Now you might argue that, hey, this is just shorter term data. So let's load in the max available data and see if the same pattern holds true. Now using our max available data, we can still see a few of those months that we saw. We see January, and we still see September standing out as our 2 months with yellow labels. We still see the same idea of September closes a little bit above where it opened more times than not, but the month's average is still negative. So a split story even when we load in all of the available data we have. So that's our first reason why I think we can't really go in with a bias one way or the other. Price tells us weaker performance, but probabilities tell us, you might know, who knows, coin flip. Now, if we take off the seasonal analysis indicator and we try to answer that coin flip with a little bit better data using our post-earnings tool, that's where we can start to get some real numbers beneath us. Now, I'm going to switch back to the 5 years worth of data first, and then we'll expand to max available to see if the same patterns hold true. Now, using 5 years worth of data, in 7 days post-earnings, we can see inside of Nvidia that price action tends to rise about 45% of the time, but it tends to fall 55% of the time. So the bias here is that 7 days after earnings, more times than not, we see price drifting a little bit more to the bearish side. Now, what happens if we, say, change this from 7 days to 14 days? And here we can see that we have a little bit more of a split down the middle breakdown, 50-50 right down the middle. Plus or minus 8%, 8.5%, for our price movements. Now, if we change this from 14 days to 30 days, this is where you'll start to see that pendulum swings a little bit more now towards the rise side. So it's really between that 14 to 30 day period that we see these numbers start to go from that 50 to call it a little bit less than 50 mark to now being closer to that 60 and with 5 years worth of data, 65% of the time. Now what happens if we say go from 30 to 60 here? So this is 2 months after. We can see that same number holds true, but here our actual averages are increasing. And this would make sense given the overall bullish activity we've seen inside of Nvidia. So I'm not sure the numbers are something that impress us, more that it confirms the story that we would go in expecting. Now, the real way that we can confirm what's happening here is by checking what tends to happen instead of just 5 years. We load in max available data available to us. This goes all the way back to about 2007, 2008, and it starts using earnings after that. Now, if we start first with the 7 days post earnings, and we zoom in, we take a look to see what happens 7 days post earnings. Price action tends to rise about 50.79% of the time, tends to fall about 49.21%. So split right down the middle 7 days after earnings, even with all the data we have available. What about 14 days after earnings? Remember, with our shorter term data, we saw that this number was still a little bit less than that 50. Here we can see 58.73% starts to drift a little bit more towards the rise side. Now, what happens 30 days after earnings? Here, 30 days. And we can see this number gets close to that 60%. Remember, with shorter term data, we saw that closer to 65%. And if we load in 60 days worth of data, we can see that the number continues to increase, and we get closer to the averages that we saw with our shorter term data. So the moral of the story that I get here is that 7 to 14 day period really makes sense to be a little bit more patient and wait price action out. It's between that 14 to 30 day period that seems to be a decent time to be looking for an entry. And if you are looking for an entry, I should say, and waiting even through that 60-day period, we tend to see that price action only confirms that rise. So essentially waiting about 2 weeks after earnings action to cool down, looking for an entry somewhere between that 14 to 30 day period, and then using that to pinpoint where you'd like to enter for the next, let's call it 1 to 2 month period. So that's my takeaway from Nvidia. Either way, it looks like we're likely to see some shorter term resistance here, and I also think September is likely to be a little bit weaker month for the overall indices, where I expect Nvidia to follow suit. So while we did have this strong earnings report, Nvidia of course does not look anywhere close to attractive up here, but I think we do have a decent case for why patience may pay off for at least a shorter term swing trade inside of Nvidia in that 14 to call it 30 day period. I hope you found this video useful for anyone looking to trade Nvidia post earnings. Take care everyone, good luck trading, and I'll see you in the next update.